Welcome back to Rich Dad StockCast. I'm your host, Denney. In today's episode, it's all about a topic most investors ignore and later regret. Everyone says they want passive income. Everyone talks about financial freedom, but the truth is most people never become true cash flow investors and they stay stuck chasing quick wins, hot stocks, and hype. Today, we're breaking down why most people never make the shift to cash flow investing and how you can. And I can't think of a better person to guide us through this than Rich Dad expert Andy Tanner. He's one of the best in the world at teaching cash flow strategies that actually work. And before we dive in, go to stockcastbonus.com and grab your free investing tools and checklists. If you want to stop speculating and start focusing on cash flow, those resources are your next step. Andy, welcome back to the show.
You chose a great topic, Del. I love this topic. I think it's a huge opportunity for insight and a quantum leap for the average person for sure, because as you said, most people have no idea what cash flow investing is in stocks. They wouldn't even know how to describe it. So this is going to be great.
I'm chomping at the bit to ask you questions about cash flow. But before we go into the topic, I do want to ask about stockcastbonus.com. What do we receive by going there?
Yeah, right now we have a really cool bonus. We've got some free resources you can download, no charge, and they're really for people that want to move this needle. The most important financial statement in the world isn't the United States, financial statement, which is in trouble. It's not being able to study Apple's financial statement, which is awesome. It's yours. And whether you live in Greece or whether you live in Venezuela or my home country, the United States, the financial statement that will impact your life more than any other is yours. And there's, if you look at 6 numbers, income, expenses, net income, assets, liabilities, net worth. If you look at those 6 numbers, your ability to change those, your ability to look at where you are now and say, hey, I don't like this number. How do I manipulate it? How do I begin to change that? That will affect your life. That will change your life. It will help you elevate your financial well-being for sure if you learn that. So right now, that power of 6, those 6 numbers, the power to change your life within those is at your fingertips. And so go to stockcastbonus.com and download that stuff for free and get going. Start changing those numbers. And you probably can sense that if you change the numbers on your financial statement, that corresponds to a wonderful change in our lives. So that's what it's for.
There we go. Those numbers are crucial for sure. Now, let's get into cash flow, another crucial topic of today. Why is it that most people say they want passive income, but almost no one actually becomes a cash flow investor?
Well, unfortunately or fortunately, depending on who you are, stocks. The moment you put a price tag on a stock and have a lot of people speculate on it, there's a huge detachment from what we call fundamentals. Let's talk about 2 of the 4 pillars of investing. We don't need to talk about all 4, but let's talk about 2 of them. If you played the cash flow game and you understand a financial statement, you can look around the board game and look at all the other players' financial statements. You can see who's winning. You can see clearly who has strength and who has weakness in just fundamental wealth. And that's where that word fundamental analysis comes from. So when you look at a business, how you should look at it, in my opinion, is you should look at it like a doctor doing a checkup. You should do fundamental analysis, look at the financial statements and the growth, and there's all kinds of different numbers we can study on those, and that's part of financial education. But we say, this is a machine that creates cash, and this is how well the machine's running. If I buy this machine, what's my return on investment from the money that it makes? So we didn't make a golden goose reference in the previous podcast. We better make one here. Is a person that wants to buy a goose that lays golden eggs is far more concerned with the health of the goose, far more concerned with the production of the goose, and the price is really the smallest part of it, because you say, okay, once I know the goose is healthy, and once I know what its production is, now price has meaning for the first time. I can say, all right, if I buy this goose, We have this thing called speed or rate of return, which is a velocity. It's a speed. How long or how fast will that goose give me back what I spent? How soon will he pay for himself? And that's the big question that people don't get. What most people would do, which is not as smart as a fifth grader, is they simply look at the goose and they watch the price tag moving. They don't look at the health of the goose. They don't look at the production of the goose. They just say, let's watch the price of it move on people's opinions of what the goose could be. Well, if people start bidding up the goose and they make decisions that way, you can have, tulipomania, where people are just buying it because they think the price is going up because of a trend as opposed to real value behind it and trying to get paid as a business owner. So that's the difference, really important difference. You have capital gain, which is when you buy low and sell high. That's not money that's earned. That's money that's gained. That's why it's a capital gain. You gained more capital. You increase the amount of cash you have because you bought low and sold high. That's not cash flow investing. Cash flow investing is where you buy something that gives value to the community. What am I hearing? Are you hearing that, Del?
Mm-mm.
It's almost as if someone's running across the ceiling. I wonder if are you attached to another speaker in your house, perhaps? Like another room?
No, but I think I am getting a little bit of interference on my headphones.
Okay, I heard someone kind of talking, crying out. I don't know. I'll let you listen to it. I'm sure you can filter out what you need.
All right, yeah. The only thing my kind of not crackles, but it's like distortion.
Buzzes. Yeah, mine do that sometimes, especially when I pull one out. But no, this is like footsteps and running, and it's like a toddler.
Oh, no, I don't hear it, unfortunately.
Okay. All right.
Sorry.
I don't know. It must be crazy. I must be nutty. I'm looking. Do I have another app open or something? Or I have no idea. Anyway, okay. We'll go back. Sorry. Cue that up again. I don't know where I've lost track.
Let me go back to it. The question is, why is it that most people say they want passive income, but almost no one actually becomes a cash flow investor?
I'll put a cap on that. So the reason people, don't become cash flow investors is they're always trying to buy low and sell high. And instead of being a business owner that's going to make money off sales of a product, they're trying to make money by buying low and selling high. And that's how CNBC treats it. That's how Wall Street treats it. Most of the trading now is done electronically very, very quickly, trying to get little pieces of gains out of stocks by buying and selling. And it really can create a detachment from fundamentals. But I much prefer cash flow investing, much prefer it.
Now, what do you think about, there's a lot of myths out there about cash flow investing, probably ones that really gripe you a little bit. What's the biggest myth people believe about cash flow investing that you want to squash?
Boy, there's a lot, but I would say the top is people, I don't know if it's a myth, but it's a underappreciation for sure, is that people dismiss dividend investing much too quickly, in my opinion. Dividend investing is probably the easiest cash flow in the world. Warren Buffett has a great quote, and I quote this all the time. I'm not going to do the long version. I'll do the short version, but he talks about the lowest way to participate in American business. Think about that for a minute. The lowest way to participate means you're doing the least for what you get. And that's a high leverage activity. When you can do a lot with a little or do everything with nothing, you've got a lot of leverage. So what does he mean when he says, a person who participates at the lowest level of American business? He's talking about making money from being an owner. If you were to participate in Coca-Cola and you look at that company and say, what are all the different ways I could participate? I could, be the guy that's, preserving the formula. I could be the guy that writes their new advertising campaign. I could be the guy driving the truck to deliver the Coca-Cola. I could be the CMO that's making sure the marketing's done right. I could be the the chief executive officer running the company. I could be all of those things, and I could participate in that company in many, many ways. But the lowest level, the smallest amount of calories I could burn in behalf of the Coca-Cola company is to own that work instead of do that work. And ownership is, I'm on my bully pulpit to the degree that I have one, telling people you've got to own AI, you've got to own companies that use AI, because our production is going to go through the roof in the next 10 years. We're going to have more productivity than the world has ever seen, more efficiency. We're going to do everything better because of AI. Owning that, being the low, participating in that at the lowest level, not the greatest level, the lowest level. I'm not going to code the AI. I'm going to buy it. Coding it takes a lot of work by smart people. Owning it just brings you the money and the benefit from it. So owning stuff at the lowest level is what dividend investing. Well, the reason people poo-poo that is they take quotes of the dividend today without being a forward thinker, and they don't buy dips. So I always use the same example. It's one of the best, but I could do this with Prudential or other stocks I bought, but people are very familiar with this one, so I use it a lot. Is in COVID when oil went negative, when the futures went negative, everyone thought Exxon, Chevron, they're not going to make any money. Oil's free, oil's negative. Well, when those prices of those oil companies dropped, Exxon went into the 30s. I bought it in the 40s. But when it dropped, their dividend didn't. And so for a window of time, if you were a dividend thinking guy, you could say, my gosh, they raise their dividend every year. They've done it for 40 years in a row. Why would I not want to buy that dividend and get that for the rest of my life at this low price? So let's do the math on that. As of this recording, their dividend, I think, is $4.96. And next year it'll be an even $3.96. Next year it'll probably be even $4. It'll probably go to $1 a quarter next year if their trend continues. So let's just look at that. A guy buys it at 40, and now he's got a 10% ROI for the rest of his life and his children's life because he bought that. Now the stock today is probably 109. I haven't looked at it. 108. I don't know what it is today, but I haven't looked yet. I'll never sell that. Even though I've more than doubled money on it, why would I sell that? And that's the difference. I'm not looking for a capital gain. I'm not looking to say, well, I guess ExxonMobil probably won't go to 200. It's probably at the high now. It's probably not. Why would I do that? I bought the thing in the 40s. I'm going to get 10%. Then if you add the ability to get a percent a month or a 0.5% a month by writing calls, now you got a 20%, investment. That's really good, right? For doing nothing, for participating at the lowest level. So as you accumulate stocks like this, Warren Buffett, you have to be forward thinking. He bought Coke at $3.25. Their dividend, I think, is like $2 probably. So pretty amazing. That's a huge ROI. So I think the biggest thing people miss is they think, well, dividend, the dividend on Apple isn't even 1%. Why do that? Why buy that? Well, it's at 1% relative to its price today. If you buy it low or would have bought it low, your investor yield is through the roof. So it really, they'll keep that dividend up with maybe 1 or 2% of where the price is today. But once you buy it, as that continues to grow and you bet on inflation to happen, you're gonna see a big ROI from a lot of those dividend companies. So I think a big myth is that people dismiss dividends way too quick because it is the easiest money in the universe to have. Own a company and they pay you a dividend. It's like being in a syndication where they give you a distribution every month. It's the same thing. Dividend distribution, same thing, no different.
That's huge right there. Now let's do this. Let's take a quick break. We've just unpacked the biggest reasons people struggle to become cash flow investors. But when we come back, Andy's going to show us exactly how to flip the switch and start focusing on income instead of speculation. And if you're ready to make that shift now, head over to stockcastbonus.com, grab your free resources, grab your checklist. They're built to help you to focus on smart cash flow driven investing. Stick around. We'll be right back.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning as well as it's really solidifying in my mind. And like, they're not just trying to sell you something, they really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad StockCast. I'm here with Andy Tanner. Now we're going to get tactical, how to actually start cash flow investing. All right, so Andy, where should someone start if they want to be a cash flow investor?
I would start where I had my kids start, with something we call click and get paid. Now, we spoke about dividends before the break, and dividends are profits, from the company. They take the profits, it's called a payout ratio. They take a ratio of the profits and they give it to the owners, right? That's the lowest way to participate. But there's a way to make money in addition to that I just love, that we call click and get paid, where we actually get paid up front. We get paid first, and we do that by selling options, against our stocks. And this is very conservative and very predictable. My threshold for mine, I'm not that greedy, is 90%. So I find trades that have a 90% probability of success, and I execute those trades, and that's about what it works out. About 10% of the time I got to adjust something, and 9% of the time I just take the money. And it is that simple. It is that predictable. It's, the key to that one is learning what to do the 10% of the time where it doesn't do what you expected, right? And once you have that down, that's the biggest part, because the other 90% of the time you just take money by clicking a mouse. And so being an option seller is never, it's never something you get tired of. I mean, just if you can imagine this idea, I call it click and get paid. Click a mouse and boom, you just watch the money go right in your cash account that quick. It's like it's on demand, bang, in cash. And we get to do that once a month, right? With all the stocks. I do it on all the stocks I have, every single one of them. So not only are you getting a dividend, you're stacking income from puts and calls. So there's 3 different resources that's extremely conservative. You can do that in an IRA. It's not that tough to do. It's not that tough to learn. For those that want free stuff, go to StockCast Bonus and start learning foundational stuff. I did a class. It's an inexpensive class. I mean, I can't remember what we offer it for. It's like a couple $100 or less, might be $100. I don't know. But I call it zero to cash flow. You'd have to find it somewhere or whatever. But, Rich Dad folks could tell you about it. But it really is that idea of saying, I'm not getting any passive income. I'm getting zero passive income. I just read Rich Dad Poor Dad. I don't know how to do it, to establishing a monthly income, zero to a monthly cash flow of some size, some amount. And that's where you start, just going zero to cash flow. So I would say that one of the most exhilarating, fastest, easiest, simplest ways is to learn how to sell an option on a stock that you own. And you can, setting a goal for 0.5% each month is not outlandish. Setting a goal for 1% in some cases every month is not an outlandish goal. So, that's a great way to set a goal for a double-digit return on something. If you start with a few things, you buy things low. You get Prudential in the 50s instead of the hundreds, right? You see those dips and you buy when everyone else is selling, looking at that dividend saying, now I got a 5%, 6%, 8% foundation. And then you try to write 0.5% a month to 1% a month on the options market. Next thing you know, you've got some nice double-digit performers in your portfolio that can really grow, and 1% is enormous. And these are all off cash flow, not about price movement. They don't require a movement in the price to be profitable. The dividend doesn't need the price to move. The option premiums don't need the price to move to pay you. And when you divorce yourself of price and you're no longer dependent on guessing which way it's going to go, there's a freedom to that and a consistency to that I think would be interesting to everyone. It's not everyone does it. Most people are too lazy to learn it, or just don't believe in themselves, or they have some mental block. Oh, I could never learn that. Sounds complicated. Well, that's their problem. but it is available for every human being within the sound of my voice to do that and to demand cash. So I would say the fastest way to establish that I know of a new income in your life is to learn how to sell an option and get a dividend. It's instant. It's like click and now you have it. So and then you just keep doing it consistently and build it up each month. Keep looking for stuff to buy and learning.
I love that tactical response. It's very simple. Now, my last question is this: for someone that's listening right now who's ready to stop chasing the hype and all the craziness that's on the news and start building their cash flow, what's one simple, actionable step that they can take this week to begin their journey towards cash flow investing?
There's a lot of things they could do. Not just one thing. It depends on how much you want to do it. If you want to watch it done, we have a mentor club that we do this every week. Every Monday, we put out a video and show the ones we're doing. So if someone wanted to watch that and copy it, that's available. We have stockcastbonus.com where we have free resources for people to learn. And as they look at their financial statement, say, well, I would like to have some cash flow come in. Well, we have ways to do that, particularly dividends, and clicking get paid is a very easy solution for that. There's coaching programs, whether mine or someone else's. I mean, there's resources. I would say start paper trading right away under a mentor. If a mentor can take you by the hand, set you up with a paper trade account, which has real symbols and real numbers to it, but you get to practice with fake money while you're learning. That's a tremendous way. So yeah, there's all kinds of ways for people to start. Where they start is really up to them, but that they start is probably the important thing, not where to start, but start doing something. Go make a mistake. You'll be smartest to do it under a mentor that's done it before every time. That's always going to be smarter, but go out and try it by yourself and learn from mistakes. That's another way you could do it, which isn't fatal. So yeah, there's all kinds of things people can do if they want passive income, but it's important that they don't just listen to people talk about it. It's very important that you get a mouse in your hand, that you start clicking it and having money come into your account. That's when it's exciting. So you want to be at that level. Whether that's through a mentor or trial and error or guessing, however people want to do it, start doing something is what I would recommend. Is always better than doing nothing.
There we go. Just start. All right. Well, that wraps up today's episode of Rich Dad StockCast. The truth is anyone can become a cash flow investor, but it takes the right mindset, the right strategy, and the right education. Just start. Big thanks to Andy Tanner for showing us exactly how to start making that shift. And if you're ready to start building your own cash flow strategy, go to stockcastbonus.com. You'll find free tools and resources and checklists waiting for you there, tools that can help you to start investing for income instead of chasing hype. And if you found value in this episode, don't forget to like, comment, subscribe. We talked about the golden goose, so throw that golden goose in the comments there. That always cracks me up to see our longtime listeners doing that. And again, thanks for listening to Rich Dad StockCast. I'm Denney. Stay smart, stay invested, and we'll see you next time.
Thanks, Del.
This podcast is a presentation of Rich Dad Media Network.